Guys, what's going on? Welcome back to another episode of Millennial Wealth. I am your host, Miguel, and we are here to talk about why 90% of the people will lose money on the stock market, right? I've been posting a lot of my social media about, like all my stock gains and, how much the market has gone on. And one pushback that I keep seeing time after time is like, oh, a lot of people lose money in the stock market. Oh, that is not guaranteed. Oh, everyone's going to lose money. Oh, that's not true. And this and this and that. So I started Googling, right? I started trying to find the actual factual sources of this information. And to my surprise, there's none. There is 100+ articles on the internet. I mean, obviously. I read 8 articles, start to finish, about why, 100%, all the facts, line by line, why are you going to lose money in the stock market? And we are here today to talk about them and maybe even debunk some of them, right? So guys, I've been in the stock market for about 8 to 9 years now, and I'm going to give some merit to the points in all of these articles because some of them are true to some extent, right? When you're new to the stock market and you are not, you haven't developed the stomach for it and you haven't developed the patience and you haven't developed like just the thick skin, I can see how some of the thinking were into some more of the newer people to the market. However, I'm here to tell you and let you know it gets better, and a lot of the things, it's not going to be an issue for you because you're already in this video, right? So I'm going to tell you my experiences. I'm going to tell you how it's been for me. I cannot say, right? If I go over my last 8 years, definitely from when I started today, I've made a lot of money in the stock market. I've lost money in the stock market, mostly because either greed or just doing things you should never do. But we're going to go through all of them here today, guys. So let's get started. And I'm going to say right now, right? Because I got a lot of pushback on my last video talking about how to invest your first money into the stock market. It doesn't matter, right? Today is January 2020. You could have bought S&P 500 at any point in history, all the way when the fund was only measuring railroads in the 1800s, all the way to this morning, and you would have made money. So this thing that, oh, it depends when you enter, or it depends when you did this, it doesn't matter. You could have bought anywhere, anytime in the last 100+ years, and you would have made money today. And I just want to give that and make a point of that very, very clear. And if the stock market were to crash tonight, tomorrow, whenever, odds are, right, history that we can look back and examine are that in a few years, it's just going to get back to where it was, guys. So, obviously, and this is, a lot of people get really hung up on the, oh, you don't know. And the truth is, we don't know. We don't know what's going to happen, guys. But if the stock market crash and never recover, we're talking about, at that point, you don't care about money. You don't care about the stock market. You only care about how many chickens you can put in your house, how many guns can you have, and how much cans of beans you have to survive. So at that point, a lot of people just like to take this to massive scenarios of stuff. Odds are all the companies in the United States are not going to do bad at the same time. Some are, like in the 2008, a lot of the real estate stuff and banks went down, and the stock market as a whole went down, right? But that didn't mean that Microsoft was doing bad. That didn't mean that Apple was doing bad. That didn't mean that a lot of companies were doing bad. It was just the way market works. But as of today, it's up all there. So I just want to preface that. Okay, guys. So emotions. It was the only thing I saw among all of the 8 articles I researched. And, we're humans, right? Obviously, we're driven by emotions. For most people like to think that they're not. And there's 2 emotions, right? It can go either when the market is going up or when the market is going down. And those are things that only time and experience will help you, right? Will give you the guts to support them. But right now, let's say Tesla. Oh my goodness, Tesla's going up 10% every week. I don't want to miss out, right? And you get that immediate FOMO into you guys, and you start putting money just because you don't want to miss out. And it can lead to some really, really bad investments. It can lead to a lot of pain. Definitely you have to keep your emotions under control. But then let's see the other side of the spectrum, right? Let's say something is dropping a lot. Oh my goodness, let's use Tesla again. It dropped 10% today. It's going to 0. It's going to nothing. And I must sell right now, guys. So that is I don't know that I've ever sold a stock going down. Let's put it that way, right? Even when everything was crashing, everything when the market was going haywire in 2008, I was like, oh, cool, I can buy more, right? So I think like if you guys are gonna be in here for the long term, 5, 10, 15, 20, 30 years, however much, right? I wouldn't say, unless you guys are getting out in a year, 2, 3 years, that's when it can get iffy. But if you guys are staying in it, if you don't need this money for 10 years plus, what's happening in the macro doesn't really matter that much. Like odds are everything is gonna be okay. Again, unless a fundamental changed, right? Let's say, and I used this example last time, if Coca-Cola says tomorrow, we're not gonna sell Coke anymore, we're gonna start selling window cleaners. It's like, yeah, this is my cue to get out, because undoubtedly the stock price is gonna go down because Coca-Cola is not gonna make Coca-Cola anymore. So they're gonna lose a bunch of their revenues. So the stock price is gonna tank. So again, if there's no fundamental change, just because the price is going down, you guys shouldn't sell. Also, guys, keep in mind that the tax you pay, whether you sell a stock, if you own it less than a year, it's gonna be a lot higher than if you own the stock for over a year, over 365 days because of capital gains. So also keep that in mind, right? Yes, you can sell now, but then you're gonna pay more in taxes than maybe if you would hold it a few more months. Another very, very easy way of losing money in the stock market is by not hitting the like button on this video. Hit the like button, drop a comment down below so the algorithm can put us in there and can keep referring us to more people. But now, seriousness, a lot of people, you ask them, like I see a lot of people that are getting new into the stock market and say, oh, I'm buying this stock, whatever. I don't, at Starbucks, I'm buying Starbucks. So why? And I say, well, I don't know. I drink Starbucks every day and I think they're good. My friend told me to buy Starbucks. A YouTuber told me to buy Starbucks, guys. At the end of the day, nobody but yourself is responsible for your money, and it's your choice, your task, to do your due diligences, to do your research. Unless you're paying like a financial advisor, right? Unless you're paying someone to manage your money, and at that point you should have some expectations of they're doing it. But if you're doing this on yourself, you have to investigate, right? I would never put money into nothing I don't understand, right? And I'm not saying like I don't want you to know how to make Coca-Cola. I want you to understand that Coca-Cola makes money by selling Cokes, right? It's just that fundamental level of it. If something is too complicated, they don't need your money, guys. There's plenty of stocks. There's thousands and thousands of stocks that you guys can get, that you guys can understand. Always do your research before you put your money into a stock, and that's gonna go a long, long way. Also, I have about 25 to 30 stocks that I'm gonna hold for the next, 20 years, maybe until I die, some of them. And I did a lot of the food work at the beginning, right? It takes a lot of time in reading them and reading all of the cases, reading the modes, reading all of that information on them. But now, every time I get some money, I feel very comfortable in just buying their stock because I love them. I know they're gonna be here in 20, 50, 40, 100 years. So I have I don't have to keep doing the research, right? There are some companies that I love to listen to their earning calls. By the way, earning calls are public. Every time obviously they're publicly traded companies, right? So when you own shares of a company, even if you don't, you can still listen to their earning calls, and that's when they're discussing, telling to the public how much money they're making, what are their future plans, how are they going on this and that. Join a few of them. This morning I joined actually the Bank of America earning call, and you just always learn so much from joining them. So guys, this next one touches a little bit of a personal fiber onto me because I've done this in the past, and this is the one way I've lost money into the stock market. Holding on to losers, guys. You bought a stock because you thought it was going to be the next hot thing. It didn't work out. It went to very low and you kept holding it because it's coming back where you should have just cut your losses. So this is very different from the first point that we're talking about, being emotional or not. Emotional or not is the stock drop a little bit and I don't know why I panic and I sell, right? Holding on to a loser is knowing a company change their business model, knowing a company is change a lot of their fundamentals, knowing a company cannot deliver, right? And you still hold on to it. And I'm going to give a quick example here. GoPro, for example, they were going to do a drone, they were going to do this, they were going to do that. Didn't happen. So the stock price dropped a lot and I held them for a little bit longer because, it's going to do a comeback. When in reality, guys, you should just, in that specific case, cut your losses and move on. However, and again, you cannot do this when you have a winning company, right? You cannot cut your losses. You don't want to be selling and buying every time a stock drops 2% thinking it's going to drop 10 more percent if nothing significant had happened to the company. So it's fine to get rid of losers. Maybe you have something that you've been holding on your portfolio for the last 3 years because it's coming back. In my experience, it just hurts to go every day and see it there. So at some point, it's fine, guys. We made plenty of profits on this other stocks over here. It's fine to cut your losses and be done with it and move on, instead of just keeping it until a company goes bankrupt, because then you get absolutely nothing for it. Sometimes you can wait to see if someone's gonna buy them out, but that is very, very unlikely in a lot of the cases. So again, don't hold on to losers. Drop them, move on, and minimize your losses at that point. Getting rich quick, guys. Have you seen? Oh my goodness. If I talk about stocks, there's probably an ad before this video about this guy. He's on his private jet and he said, "Oh, I'm something Bishop. I made $50 million from my iPad trading options. This is where the money is." Guys, get rich quick schemes don't work, right? Lottery doesn't work. Lottery, like one person, like I don't even want to get into the lottery right now, because that's just, I don't know if you know, but the common name for lottery is a tax on the poor. So if you're watching this, please don't buy lottery. But anyway, what I was trying to say is, you can't get rich quick on nothing in life, right? And I get it, guys. There are some companies that had gone 40x, 20x, 15x. If you want to go look into the last 10 years, right? Somebody like Netflix, somebody like AMD, they've done so good. But that's not what I'm talking about. It's fine if you have a company and you're hoping for it to go 20, 50x. That's fine. Doing that research is okay. Always make sure you guys are doing that, right? I'm talking about option tradings, guys. Option tradings, it's inherently not bad. However, you shouldn't start doing it, right? You should have a few years, a few months. You should have read some. You should have started very small if you guys want to dabble into that. Because option trading, it's nothing else than betting, right? It's nothing else but gambling. By this date, the price of this stock is going to be this much or this little or this high up, and I'm willing to put money in it. It is a zero-sum game. What that means is that in order for me to make money with options, somebody has to lose money with options, right? So if I gain $10, that $10 didn't come from the company, that $10 didn't come from space, that $10 came from somebody else, right? And when something is a zero-sum game, odds of you getting burned, it's gonna happen eventually, right? And there's a few options. There's a few options. There's a few options. There's a few flavors of them. You can sell calls, you can buy calls, you can sell puts, you can buy puts, you can do iron condors, this and that. I don't recommend it. If you guys, like, you can go to Wall Street Bets on Reddit and you can see people making $100,000 in an hour doing options, but you can also see people losing $100,000, $1 million in a day with options. So guys, now that we talk options, I want to talk about margin. And I'm not talking about margarine, the substitute of butter. I'm talking about margin, as in a fancy word for taking money loan, right? You can use your stock and you can use it as a collateral to get more money from your brokerage, right? The same way you can get a loan using your house as a collateral, the same thing you can use your credit score as a collateral to get a credit card. You can use your stocks as a collateral to get more money, right? If, let's say, you have some stocks that are very, very non-volatile, right? Something like Microsoft, that it's just like a very, very slow movie stock. I have $100 on Microsoft, and a company like Robinhood can be like, "Oh, since you have $100 in Robinhood on Microsoft, I'm gonna lend you $100 for you go and trade off." The thing is, if you use that money, you have to pay me 5% APY, a year. Guys, you don't want to do that, especially if you guys don't have money saved up for an emergency, because what's going to happen is, right, the first year you guys are doing so good and it's like, holy crap, this is only going up. This can't go wrong, right? And you say, oh, it's going up at a rate of 15% a year, 10% a year. Maybe you rode the whole 2019 and you made 30%. Maybe you made 100% with your Tesla or AMD or whatever. And you're like, oh, this only goes up, right? So then you spend a lot of your money from the margin buying other things, and then you have an emergency, and now all of a sudden you don't have any cash for it. So now you need some cash because you didn't have any savings, and the stock takes a big plummet that day, and then you have to sell some positions at a loss to cover that, and it's just a never-ending cycle, guys. I have rarely used my margin at anything, and if I've ever used my margin, it's while the money gets inserted into my account, because it takes about 3 to 5 days with Robinhood, but they let me use it because I pay for Robinhood Gold. But other than that, I would recommend staying away from margin, guys, because the stock crashes and all of a sudden you owe somebody $20,000 and you're paying 5% interest. And you say, oh, the stock maybe will go up next week or next year. And next thing you know, you're paying a bunch of interest on it, guys. So it's the equivalent of paying like buying stock with a credit card, which, I mean, don't do that, guys. We're trying to build wealth here. We're not trying to get further in debt. So let's keep that in mind. So guys, the last thing I want to talk about is fees, right? I think fees are the silent killer that a lot of people don't realize. Maybe a lot of people are using like an actual broker to invest their money, and they have a 1% fee, a 1.5% fee. Maybe they have a really high fee ETF or something like that. And the way you're losing money is you got to remember that we have inflation, right? There's a global inflation, 2%, whatever, every year. So unless you're at least making what the global rate of inflation is, you are losing money right now. Maybe you have a broker that's taking a 3% fee on all of the gains, and next thing you know, oh, he's making all of this money, but then you're paying all of those fees. So is it even worth it, right? Especially if you have something like bonds that they return almost nothing, and on top of that you're paying a fee on top of that. You're definitely on the negative there, because once you put out, oh, it's doing 2% returns, right, and I'm paying 2% in fees, so they cancel each other, and then there's inflation. So you guys have to check what are the fees if you're doing ETF, if someone is managing your account, because the fee can be the silent killer. And by the way, a 1%, even a 0.5%, guys, over 30, 40 years, it's thousands and thousands, if not hundreds of thousands of dollars that you potentially miss. So you guys have to keep an eye out for that. How much am I paying? How much are they taking away? How much are they returning? Like, if not, your money's just gonna go away. But again, guys, it doesn't matter if you're paying someone to manage it. At the end of the day, it's your money and it's your responsibility to know where is it going, what's happening with it. So guys, those are the main factors on why you are guaranteed, according to all of these 8 articles that I read, we're all doomed, guys. Nobody's making money. Nobody's gonna retire, guys. And to finish this up, guys, one comment that I kept reading the other day was like, oh, not everyone can be rich. Not everyone can be wealthy. Not everyone can be a millionaire. And to that, I have to say, I think maybe not everyone can be a millionaire, but I think everyone can be wealthy within their own scale. And I know that there's very particular circumstances in everyone's life, and things are going to happen. Life is going to happen. However, guys, saving a little bit every single month and invest in it over long periods of times, it will eventually develop into wealth. Most people that are not wealthy, most people that are saying that this doesn't work, most people that say the stock market sucks, whatever, they did one of the things we just talked about. They had a real bad experience. They entered the market right when the market crashed. They didn't stick to it. They didn't do their own research, and they got burned, and they have just like this hatred for the stock market, right? Because I've seen it. They steal your money. It's rigged. It's this. Guys, odds are, if you have a long time, you can do it. And I do believe that every single person watching this video, you can achieve the goal of being wealthy. One thing I notice is that I can guarantee you, everyone saying the stock market is a sham, or you cannot be free, you cannot be that free, you cannot be rich. If you look, they have like this crazy expensive like lifestyles. They have credit card debt. They have car loans. They have like everything you can. They have student loans that I haven't paid out, guys, and that's the most important thing, guys. Before you start investing, make sure you guys are out of debt. Make sure you close those credit cards. Make sure you guys are just paying everything off. So anyway, guys, I want to leave you all with this to wrap this video up. Remember, you never truly make money or lose money into the stock market until you buy or sell. So anyway, guys, I'm gonna wrap it up for this video right now. I hope everyone's having a fantastic time, a fantastic day, guys, and I catch you all later. Bye.